Well, hello, folks. I'm Ellie Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective each time, asking ourselves one question: what happened today? And what does it tell us about the coming ones? I do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's available there. It's under the channel L.A. Little. You can subscribe. Anytime I push content, you get a notification. Make it very simple for yourself to know whenever there's some new content out there. I do broadcast in the morning for members. Some usually put out a trading video each day, as well as, of course, these nightly shows. And it seems like you need 2 or 3 more shows as fast as things move nowadays. If we look at what happened today, we had another down day. If you remember last night, I was talking about the probability of some sort of a bounce and then more down, and specifically the risk of the Intel earnings report tonight. And when I talked about the bounce, I didn't know that we would get this kind of a bounce. What is that, about a point? Maybe 2 points? A very small bounce. It didn't get much out of it. And then we proceeded down almost 1% on the S&Ps, same on the Dow, 2% almost on the Russell, 1.25 to 1.5 on the NASDAQ and the NDX. Gold soars 29 bucks. What's happening? Well, it all is tied back to the Swiss, and the Swiss decided that they were going to let their currency float. They weren't going to peg it to the euro anymore, and this thing went ballistic. Up 17%. If you look at it on a weekly, you can get a feel for the magnitude. This thing took back 6, 7, 8 months of trading in one short day, and actually probably in about 15-20 minutes. That is a huge move for a currency. And folks, you've heard me say it before, I'll say it again. Fast moves in currencies usually lead to larger moves in equities. And I think that this one is going to be no different, in that you're going to get a larger move in the equities as a result of it. Once they decided to let this float, and it was like 2 days ago they said they weren't going to do this. And this is from an institution that is one of the more quote-unquote believable central banks. I can't overemphasize the magnitude, not so much the effect that it's Switzerland, as much as we're not talking about a huge economy. It's not that big. We're not talking about something that the magnification of the effect on that particular set of loans that were out and so forth, and those monies that had been borrowed in Swiss francs, which just got crushed. It's not that. It's perception. Central bankers have been godlike for 4 or 5 years now, right? Somehow they've got it all figured out, or at least that's the perception. Economics is all about perception. If the perception is they are dodos and they don't know what they're doing, that's a problem, right? That's a real problem. And I'm not going to say that these guys are dodos, but they definitely changed their tune, and they changed it all of a sudden, and they ripped some people just totally apart. And if this central bank can do it, others can do it too. And that, I think, is probably, this whole trust factor is probably the biggest ripple out of this whole thing. I think it's gonna play out over time. It's going to be an issue. And it's going to be an issue in that the rest of these central banks are going to be questioned a little bit more. And speaking of this particular move, this probably, or at least the expectation is that this probably says with some certainty that the ECB is going to do QE next Thursday, and now the only question is what kind of QE are they going to do? Is it going to be a massive Japan style, just blow them out kind of QE? Can Draghi pull off that kind of QE? Or is it going to be a drip drop kind of thing, which is what Draghi typically does? I think this market, at least the European equities, now expect that it's going to be a blowout type situation, because if you go over and you look at some of these equities now in Europe, look at the reversals here in the DAX taking it up to the highs. This thing closes over 10,000, right? Big reversal today, spikes up, and the point of showing these, and I'll show you the CACs as well, because the CACs did the same thing. It's not nearly as strong, but did the same sort of thing. The point of looking at those is that they look very different than our markets. And I was commenting I think it was yesterday or the day before, how we were seeing rotation into the weaker sectors inside our market. Well, this looks like rotation into the weaker markets around the world out of our market, although Europe I wouldn't say is weak, but certainly putting money in other markets and not in the US of A. And this one, as we'll talk about here in a minute, is set to break lower. So big moves down. Gold, big spike up. We'll talk about it via a question there. We got bonds spiking again. I don't know how much farther they can go, but this is another huge move in the bonds. Dollar was up on that Swiss news as the euro got tanked on the expectation that you're going to get QE and you get it in a larger way. And then, as if that wasn't enough, oil. That bounce yesterday lasted a whole day, down almost 5% today. So let's pop through some of this and look at what we got. Now, I've been talking about, or I had talked about this bar, and I've been talking about it with members more so than here, that this was the key bar, and we got underneath it yesterday, and I said it last night here that if we couldn't recapture it today and get up back inside of it, I think it's a real problem, and it is a real problem. We're coming after the lows. We're going to break this down tomorrow, and we're going to come after the lows. And it's not this particular chart that tells you that. It's the NASDAQ and the NDX in particular. So let's pop over to that one next. Here's the NDX. It's already broken this swing point low tonight. Doesn't quite have the volume, but it's going to be a break. 40.90.33 was the low. You close underneath it, and you're just barely over this one. This is that scenario that I talk about, over and over, and a lot of people, give me a bunch of crap about it, saying, hey, it doesn't matter. Well, yeah, it does matter. A lot of times you see this kind of a situation, and it's not a happy one. It's a sad one, right? Multiple swing point lows, breaking on multiple time frames. That usually projects 2 to 3 bars in the direction of the break, and it usually projects a fast move. And so this break, from what I can see, is going to take us on a fast move lower. And what you have to do next, of course, is look and see, okay, where can that thing go? If I pull this over and look at it, I can see this big bar in that one. So that's 40.19. We're trading at 40.89. I would think you can hit that tomorrow, 40.17. But the real target looks to be the high of the low. And that guy is 38.93. We're sitting at 40.89. So that's what, 200 points on the way down? I don't think we potentially, well, I shouldn't say I don't think we do it immediately, but we do have an ABCD structure to the downside. It's going to take us down. And actually, I didn't do the calcs, so let's do the calcs together. 43.22. That's about 132, and that takes you down to 41.20. Excuse me, 40.20, which takes you down into this area. So 40.20 is the number. Yeah, it's a pretty good move to the downside. Did I do that right? 40.20, 120. Yeah, 40.20. That's the NDX, and the NDX is ready to break. The one that's more, I wouldn't say more important, but that this is going to be important is the NASDAQ. That one also has multiple swing points, and that one also looks like it can break tomorrow. The ABCD structure here, 48.14. That's about 240 points it looks like. And 240 points get you down to about 45. 45. Yeah, it's not all that far. 4,500. It's in the bottom of this bar. Okay, so they all break. Okay, so what does that mean, right? In 45, if I pull over this, the weekly is going to take you right into this bar. And so, you know, when I say the highs of those other bars, right, that's going to be the target. And what I'm thinking of is you get a fast move down and some sort of little bounce, and then you go on down again, you know, set up another ABCD structure. So what I'm envisioning, and this has to happen fast because your ECB coming too, right? Unless that ECB is a bust, which would really screw things up. So you got this ABCD structure on the way down, some sort of bounce after that, back into a retest, regenerate zone, right? So somewhere into here, and then another one down to take you down lower. And if this isn't much of a bounce, this could take you all the way down into that number I was talking about, which is about 4,300. So you could see how that could line up as a big drop if in fact it plays out that way. Now that still, you know, even when you look at it, that still doesn't do anything to break on the weeklies. The weeklies are so far down, and I pointed this out in this article that I did a couple of days ago here with Market Watch. The weeklies are so far down that you can go a long way and you still aren't going to break them. So this is just going to mess up the short term, and then I suspect we get some sort of a rally off of it. And I'm sure, I'm not sure anymore because you actually got a failed bounce this time, but I suspect there will be plenty still thinking you get a V-shaped rally off of that one. And maybe we'll get a good rally. I don't think the world's coming apart. I just think it's frayed at the edges, and I think that you know, there's more and more susceptibility to volatility taking place, which we're starting to see more and more of. So the Euro stocks surge. Hong Kong, China is at the highs. There was more talk of you know, the loans coming out of China, record highs again. Bonds make new highs. Let's take a look at the bond market. So this thing just keeps rallying. And what's amazing to me here is not so much this particular market, the TLT, right, the long end of the curve, but the short end of the curve. You know, it's always fascinating to me because when I see these big spikes with volume, and let me pull the daily up, I mean the weekly up. Remember that big spike back in October at the October lows? We're over it. And this is on the 7 to 10 year bond. But that doesn't even tell the story. Let's go down to the, what is it, the 3 to 7 year bond. The 3 to 7 year bond, it gets over it. I didn't even think it would be able to get back up there. But it did. And it's over it. And if we look at the 1 year bond, it's almost back up there. This is like insane moves, huge volatility. You know, I suspect, or at least I'm looking for, just as I told you last week, I'm looking for this market to go down to actually set up some decent buys in front of the ECB news, probably get a spike off of it, right, and then set up potentially for some more down depending on how that spike looks. So I think this is probably the best case. I even said it here last night that the best case the bulls could hope for is actually go down and get it over with. And that looks like what's trying to happen. Gold spikes higher. Had a question on gold, so I might as well tackle that while I'm here. So let's look at the weekly. So I've talked about on the weekly, you needed to get a break of this swing point high. Well, you're over it. You got one more day. If it can hold over it tomorrow, and I think there's a decent chance it can, that will change this picture from a bearish picture to a range trade. And that doesn't mean that gold's going to go straight back up and make new highs. It could, but that doesn't mean that. It just simply says, hey, this no longer is bearish. It's some sort of a range, and then the question becomes, what's the range? And I think a good range would be something like that. So you're still in kind of the bottom half of that range. If you take and project these things, from here to there and up, that takes you up almost to the tops. So you can see the two ranges, and this one's just in the upper half of it now. So those ranges, a lot of times breaking swing point highs, they actually end up breaking ranges. What you can also see here on the weekly is this ABCD structure is not that far away from being finished on this leg. So if you're all geared up to buy gold right here, you may get right, and this thing may just continue on because gold has the ability to do that. It can overshoot pretty easy. But at the same time, recognize you're coming into a big bar, and you've got an extension up on your ABCD structure that should end. And so I guess I wouldn't bet the bank on this kind of a move. That resistance zone there is still in effect. This one just got blown away, and that one's in effect, and that's the one you have to look at next. I like the gold market. I've said that many times. The one thing I did see today that was interesting is the gold equities weren't able to keep up with the gold itself. So we had, we do have an ABCD structure up here, but this one's not over the swing point high, whereas the gold already is. This one also ABCD structure, just about done. So I don't know that you want to chase gold. I think you buy gold when it retraces. I've said that many times. I like the way this is setting up. I just think that you've already had a pretty decent move in these stocks. And let me pull this in on a daily now. And let's see. So, yeah, see, it didn't even make it back to the highs. I mean, gold's spiking to new highs, and you can't even get the GDX back to new highs. That's just kind of telling you that, I mean, they're held back to some degree by what's happening in the rest of the equity market. They'll have their day in the sun again, but, if you look through, and I was talking to some members today, if you look through some of these guys couldn't get over their highs. I mean, some of the strongest ones here, like AEM, gold was a strong one. That one got over the highs given the currency structure, because that's in South African currency. What's another one? No, I can't think of another one off my hand. EGO is one I was looking at before. That one couldn't get over the highs. So I don't think these gold equities are the ticket just yet. I suspect you're going to get that ticket on a pullback when it finally comes into effect. The other question had to do with, and I'm just kind of skipping around here, I'm going to hit the other one while I'm here, and that has to do with oil and the XLE. So oil, remember, makes the big move up yesterday, up 5%, 3.5%. Today back down 4.5%. That was after about a 5% rise. It did have more volume at the highs today. And since we're here, let's pop into this and see if we can see what it looked like inside the day today. So let me pull it in on a one-day chart, put it on like 10. Yeah, it had decent volume. Yeah, I was trying to decide if that volume was mostly on buys versus sells, and it's not that easy to tell. It looks about even. So I don't know if that means we're going to test the bottom or not. The question had to do not so much with that, but with the XLE, which of course trades off of USO. There's a lot of pressure on the XLE when the USO is continually going down. So we had a break yesterday. And that was, we went underneath this low, 72.51. We traded under it at 72 or 71.70. We did 52 million versus 56. That's not a huge discrepancy, but it was lighter volume. It does look like it's going to try to test it one more time down here tomorrow. And you know, if it can, if the volume dries up, this would be a good test tomorrow. If the volume dries up here tomorrow and you can't stay under it, right? That's a really good sign. And tomorrow being Friday, it's going to be a good sign here as well, because if it can hold over this tomorrow, it will be a weekly holding a low. 72.51 is the mark. So you know, if you're wanting to be long this 72.51, this mark, you want it to hold over it tomorrow. So you're probably going to test into it. It's just a question of, can you hold it? If you can hold it, then that's a good sign, and this thing may get its bounce. Do recognize that, you know, there is an ABCD structure here in place, and it hasn't been violated yet. It's still in place, so it could trade back down there still. I like the setup. It's just not that clean with everything else happening out here at this particular time. There was another question had to do with the composite, and the question here was, if the composite breaks, will it take the rest of the markets with it? And the answer is yes. I think you're going to see a fast move down 1 to 2 bars on the daily, and then you're going to get a spike back up. So if you think about the calendar, you know, tomorrow's Friday, you break this tomorrow, that means Monday, Tuesday probably continuation, at least sideways if not down. And then what does that do? Thursday's the ECB. It sets it up pretty nice on the calendar. Okay, what else? Oil bounce spiking higher. I talked about the viewer questions. So, you know, let's talk about the synopsis right quick here before I run out of time. I had talked last night about some sort of a bounce and then more down. Well, we got a very little bounce and we got more down all on the same day. We're ready to break swing point lows. That's probably going to lead to a faster move down. If you want to buy this market, you want to let it break, and you want to look to buy that extension on the ABCD structure and play the bounce on the way back up. That's the odds-on bet, right? And that probably, those buys probably come in late Monday or Tuesday, or sometime Tuesday probably. Maybe even as low as on Wednesday. That's the way the trades are set up. That's where my head is right now, and that's the way I'm looking at these markets. As always, I thank you for joining me, and you know, hope you tell a friend, tell two. As I point out to others, it's easy to share this right here on YouTube. All you got to do is, you know, click the buttons down there. You know, if you go down on the shares, you can share it via tweeting at somebody. You can share it on your Facebook, Flickr. There's all kinds of ways to share this thing. I appreciate it if you do, you know, because organically I can grow a heck of a lot faster than me trying to reach people individually. So, you know, if you know of people, or if you have a Twitter account and folks follow you, you know, tweet it. I appreciate it. Have a great night, folks. Thanks a lot for joining me, and hopefully this helps you as it helps me. And I'll see you next time. Have a great one. Good night.